Hi, everybody. When we start talking about accounting and learning about accounting, we have a tendency to compartmentalize too much, I think. We need to look, it's important to do that as we learn the different components, and it's easier to break everything down into little bitty pieces so we can understand them. But also, we need not to lose sight of the overview of the process, getting the big picture. So let's take a minute and look at the big picture, shall we? With the overview of the accounting process, we go from the financial transaction to the journal to the ledger, unadjusted trial balance, adjusting entries, trial balance, financial statements, closing entries, and post-closing trial balance. Let's talk about it a minute and see what's going on. For many people, when they start a business, I encourage them to go and open a checking account, say, uh, to keep their business and their personal separate. So let's say you go to the bank or credit union and open a checking account. Okay, put $50 in the checking account. That's a financial transaction that needs to be recorded in the business. And accordingly, you've got a source document linked to that financial transaction. And so many of your financial transactions, whether they're banking or sales or whatever, you're going to have a source document. So those are important to keep. So with the financial transaction, it needs to be recorded in the books. We do that in the journal. The journal is known as the book of original entry. It's where we start. From the journal, we go from there to the ledger, which is known as the book of accounts. So we start the process. The original transaction happens. We record the transaction in the journal. From there, it breaks into its component parts with the accounts, and the accounts are recorded uh, by account in the ledger. Now, once we have got numerous transactions recorded in the ledger, we'll run us a trial balance. And the first is known as an unadjusted trial balance because it's just coming straight from the ledger and we haven't done any corrections to it yet. And so from there, we do corrections, adjusting entries. That's where we try to clean up the books as much as we can to correct any mistakes that have been made or any omissions in the books. We put those adjusting entries in and we get to the adjusted trial balance. Now, depending on the size of your business, we could do these adjusting entries anywhere from daily to just annually. I've dealt with small businesses that just see the accountant once a year, and the accountant does the transactions annually. So the financial transaction gets recorded. We go from the journal, where we initially record it, to the ledger, run us a trial balance. Many people, this is as far as they can get and with their bookkeeper. Then they do the correcting entries, the adjusting entries, and from the adjusted trial balance, we've gone in, put those entries, we've run this trial balance, and we've gotten the books as good as we can get them. And so from there, we can do the financial statements. So let's take a look at the financial statements. The four financial statements used here in the United States are balance sheet, income statement, statement of owner's equity, and statement of cash flows. And we'll talk about preparing them in another video. Remember, the financial statements are used by internal and external users. You know, the bank doesn't care about how you did the transactions. The bank just wants to see the end results. So, you know, for example, the bank is going to be a current or a potential creditor that's going to see your financial statements. Current and potential owners and investors will need to see your financial statements. Employees, management, governments, and others, you know, will need to see your financial statements. So we want to get them as good as we can. So this is the transactions that we use from the very, very beginning to get to the financial statements. Now, at the end of the fiscal year, we'll do the closing entries that we close out, and we'll have a video on that about doing our closing entries and resetting our temporary accounts to zero. And then the permanent accounts, the assets, liabilities, and capital, get carried forward into the new accounting period. And then guess what? We start this whole transaction over again. So this is just kind of an overview of the accounting process for people that are just getting started in accounting, just to kind of see the big picture and where we're going with everything. We do the process, and then guess what? We complete it and do it over. And I guess that's what keeps us accountants employed year after year. Anyway, this is just a quick look, and thank you for watching.